Good afternoon, everyone, and welcome back. This is Daily Trading Analysis with a quick market update for today, 4th of January. Well, today we got the MBA mortgage refinances index and the mortgage applications. Mortgage applications tanked way lower, minus 10% due to high interest rates. And we also got ISM manufacturing PMI and JOLTS job openings. Manufacturing PMI came lower than expected, so that's good news. But job openings came way higher than expected. We expected 10 million, a decrease for 500,000 from the 10.5 and the previous one, but we got almost the same, 10.45. And the manufacturing employment way higher than the previous one. So this was bad news for the markets because the Feds want the job openings to be lower. Right now, there's almost a 2-to-1 ratio on the job openings for employers. So they can choose and they can request and ask for high wages and high payrolls. And that's increasing the inflation as people has more money due to better conditions. So Feds want job openings to be way lower to restrain the labor market and to have all the employers to have less money and also to cause demand destruction due to lower wages. So that's for the open, almost half an hour after the open, and market reacted quite bad, honestly. This was the open, and after the open, we got this sell-off. This was the news, and we got this sell-off. We hold this 30-minute level that we were also holding on Tuesday, on yesterday. So this 10,870, we hold that also on Friday. So this was a key level, and also the 10,800. So this, we have like these levels, this band of support down here that we were holding. We didn't want Nasdaq and overall market to go lower than that. So we held that level and we started curling back up. We broke this pivot, and as you can see, if we draw this was a clear resistance. We were consolidating around below 11,000 and we got the break on 11,000. And we were waiting for FOMC minutes at these levels. FOMC minutes were at 2 p.m. and let's see what they got. So if we go to what FOMC minutes show to us, so basically more than the same as usual. Fed officials see higher rates for some time ahead. And if you check the details, participants generally observed that a restrictive policy stance would need to be maintained until the incoming data provided confidence that inflation was on a sustained downward path to 2%. That's already known, but look at these kind of things. Fed Chairman Jerome Powell indicated that while there has been some progress, we got good economic data in the past, he saw only halting signs and expects rates to hold at higher levels even after the increases cease. So we got in December a lower than expected interest rate hike, but still hike. That doesn't mean that they are not committed to increase and to continue increasing hikes, because they were seeing progress, but now Jerome Powell is saying that all the signs, the economic data is not longer going forward. It's kind of halting on the data, and they are data driven. So minutes reflected those sentiments, noting that no FOMC members expect rate cuts in 2023 despite market pricing. So if we check with that information, that is key to understand. We need to check what markets are pricing in. And as you can see, I already shared with you guys weeks ago that this is this is April 2023. Right now is 4.86. Rates, Feds were pointing 5%, so up here, but markets are pricing in lower interest rates at these levels. Markets are not pricing in 5% in April. And as Jerome Powell said, and FOMC members are already highlighting in the minutes, they are not seeing any cuts in 2023. If we go to September is the same 4.90%. So no cut since April to September. However, if we go to December, markets are pricing in 4.64. So actually, we were higher or 0.8, and we are going to be that level, and markets are pricing in a decrease from 4.8 to 4.6. And this is key. This is what FOMC members are saying. Okay, markets are pricing in that, but we are not seeing that. And this is key because there's a misalignment between markets and the FOMC minutes, and that's key to understand. If we continue, markets currently are pricing in the likelihood of rate increases totaling 0.5 to 0.65 before pausing to elevate. So we will be around 4.5 to 4.75, as I was showing 4.80 something, not 5%. But what is sure is that the Feds are not seeing any cuts in 2023. So that's bad news for the markets because markets are moved by fear, greed, and expectations. If we check what Nasdaq did after that expectations, we basically sold off. This is FOMC 2 p.m. and we basically sold off. We are kind of bouncing. I don't know if there's any press conference, but right now we are barely in the green, but I don't think we are strong enough to hold these levels after seeing that there's a misalignment between expectations in the market regarding interest rates on 2023 and what FOMC minutes and FOMC members are sharing with the world. So be careful with that. Crude oil, minus 5%. Demand destruction. Look at this. This is huge sell-off. Natural gas, 1%. Somehow, some kind of a bounce. But commodities are selling off. The only thing that is actually what analysts say is in 2023, the trade of the year is gold. Gold futures are insanely bullish. Look at this. We are breaking this pivot, we are breaking this resistance, and we are coming to 1882. Analysts expect in 2023 gold to reach all-time highs, more than 2,000. So follow this trade because if you are able to trade gold futures, perhaps you want to take this opportunity. I'm seeing bullishness in this market, and as a lot of people get out of the stock market, get out of bonds market because everything is selling off due to interest rates and demand destruction, commodities, certain commodities like gold and like dollar, maybe will start to go higher and higher as people use them as a refuge of money flow. That's quite interesting. What else is interesting? Well, XLK is green, 0.15, and XLY is actually surprisingly 1.50% in the green. Financials also green, and defensive sectors, even though they are green, they are less green than the risk-on assets. That doesn't mean that we are bullish, but if we check the daily, we are seeing some kind of support around 10,800. If we check the 30, we can see it better. So these levels are holding despite FOMC minutes and Fed saying we are going to be at high interest rates, probably 4.8 to 5% throughout the entire 2023, and we are not seeing any cuts, and that's quite concerning. Looks like markets are buying right now something. Is there any news? Let me check. No, there's no news. Maybe some press conference, but I mean, this is something. Be careful with this, because I don't think the FOMC minutes, in my opinion, are bullish enough to sustain these 11,000 plus levels around here on the Nasdaq. But we will see. For now, we are seeing the markets slightly green. Nasdaq, ES, and natural gas. Dollar is in the red, but I think dollar and the overall forex exchanges will need time to digest what is being prepared in 2023. And bonds yields are basically flat, 0.25, and the 10-year is -1. Yeah, the 10-year is going down. This is due to the concerns of recession. But I don't see any big moves, any bearish. I'm still bearish, but we will see. We'll have to wait for tomorrow, after tomorrow, to see what kind of move and what kind of news the media starts sharing regarding these minutes. Because for me, in my opinion, these are not good, because there's markets are pricing in some level of interest rates that Feds are not seeing. And more than that, markets are pricing in a cuts in 2023, 1 or 2 cuts at the end of 2023, that Feds are saying, no, we don't see them. So be careful with the expectations. Be careful what markets are pricing in, because Feds are clearly stating that they are not seeing the same. And this misalignment can cause volatility, manipulation, and perhaps some troubles if you follow what the markets do. Sometimes you have to think more than that and not fall into FOMO on these kind of moves. And if you need to be patient, if you need to take care of your positions, and maybe don't trade for a couple of days until the dust settles and you can better digest, better understand what is happening. Right now, I don't see a reason why we are going to be bullish. This is me. I'm sharing this with you guys. So I'm going to be patient. I'm not going to trade anymore today. I got some shorts of this open after the jolts. So for me, the day is done, and we will see. Tomorrow is a new day. Let's check what kind of news, because I think on Thursday, we have initial and continuing jobless claims, and on Friday we have non-farm payrolls, the first Friday of the month, unemployment and non-farm payrolls, and non-manufacturing PMI at 10. A lot of Feds are going to talk, Fed, Cook, Bostic, Barkin, and Bostic again. And I think tomorrow, we have Bullard and we have Bostic also speak. So a lot of Fed talks and also non-farm payrolls. Be careful on Friday, because this is going to be huge. Look at the expectations. We are expecting way, way lower an unemployment rate. This is the focus right now from the Feds. If we go lower on the unemployment rate, this is going to be bad. We need more than 3.7% unemployment rate for Feds to be positive on inflation decreasing. So we will see. I'm going to follow the news. I'm going to follow the economic data. I'm going to analyze everything. I'm going to share with you what is my understanding, and we will see. We have to be patient. So as always, thank you for your time. If you found this video useful, please remember to click the like button and subscribe to the channel to receive notifications when I upload new videos. I'm asking for your support to grow these kind of videos every day. Takes a lot of effort. I'm sharing with you all my understanding, all my knowledge. So please support the channel and click the like button and subscribe. I appreciate your time and I hope you have an amazing trading day. For sure, this market provides opportunity based on economic data, facts, and news. These are good. Don't get caught into FOMO moves and manipulation, because Wall Street usually does that when there's a lot of uncertainty in the markets. So discipline and risk management are your best friends, are the key for your success. Stay safe, everyone, and see you tomorrow.